Hey, what's up, guys? Good morning. Happy Monday. So today is January 10th, about 7 p.m. Eastern here. And I'm going to get you the pre-market video here a little bit early. So instead of doing it live, I figure we got a lot to talk about here. We got a lot to prep for, so let's bang it out early here. But a lot to discuss. I think the major story right now is going to be your QQQ. It's going to be big tech. So what we've seen over the last week or so is, rotation out of big tech. If you look at the semis here, a little bit of rotation out of the semis, and all that cash is flowing on into spots like energy, spots like financials. Your industrials are pretty solid here. So pretty much you got cash rotating into things that are going to benefit from any potential raise in interest rates. So you got all that going on right now. So in terms of your QQQ, this is a pretty big level of support here. Now, if you look at the weekly chart, you got the weekly squeeze and that 21 EMA, and we've talked about this, ad nauseum here. The 21 EMA has been your key support pretty much since the bad boy bottoms out back here after COVID. So you get your reversion to the mean. She holds, she holds, she holds, she holds, she holds. Do we hold here? So you kind of get your first close last week under the 21. Granted, just barely. But in terms of, price support here, we're at it. So there's definitely potential here for a few different outcomes. There is the potential for sure that they drive it down again to key support, get everybody into the shorts, and then rip it right back towards the top of that range. And then they flush it to support, and they rip it, they flush it, and they rip it. So is there the potential here that we're going to see a triple bottom? It's possible. It's possible. And if you think about a range-bound market, right, a choppy market, a sideways market, it's pretty much what we're stuck in right now, where for the last 1, 2, 3, 4, 5, 6, and now potentially 7 weeks here, we're pretty much trading in the same, call it $1,000 range here, like 16.5 to 15.5 on your QQQ futures. So 1 week it feels like the bears got control, and everybody's getting shaken out of longs, everybody's getting short, and they rip it right back towards the top end. And of course, at the top end, it feels like the bulls have control. Shorts are getting squeezed, and they reject it and flush it. So this is going to be pretty big here. Now, keep in mind, your QQQ breaking down. So if you lose tech here, it doesn't necessarily mean you lose the entire market. So the Q's breaking down does not necessarily mean the entire market has to break down, but just keep in mind your big tech, it's so heavily weighted. It's just such a major component of our market as a whole. The rotation is what has the S&P looking pretty solid here. So if you look at the Dow Jones, the Dow Jones here looks phenomenal. Good looking daily structure. You've got a 3-day squeeze, and this thing looks freaking great. I kind of want to buy that. And you got a weekly squeeze here. So your Dow looks awesome. There's rotation out of your QQQ. And that kind of has your S&P 500 looking decent. You trade into the buy zone, you got stacked EMAs, so it's decent structure. Now, if money keeps pouring out of tech here, and if it does continue to rotate, so into energy, into financials, into industrials, maybe some commodities, the market might hold up just fine. But if money's coming out of tech and then they're taking it out of financials, they're taking it out of energy, meaning if cash doesn't rotate and instead it's just kind of across-the-board selling pressure, well, then your market goes down. Now, another important thing here is, as things potentially start to change, as far as the landscape goes, you've got to be really careful about having favorites. Right? And for the last, 2 to 3 years here, just kind of talking my experience, the tech stocks, the big semis, they've treated us all really well. So I've got a soft spot for Google, for Apple, for Tesla, for Nvidia, for Amazon. You really want to think in terms of where's the easy money. So if you look at the energy here, you've got daily squeezes in XLE. You've had daily squeezes in things like Chevron, things like ExxonMobil. I'm kind of guilty of ignoring this because it's not Amazon. It's not AMD or Tesla. I think that's a mindset we have to kill in 2022. Now, the issue here for me is, what the hell do I do with Chevron? What do I do with energy? It like 3 ATR. Maybe this is the place to be for the next 2 weeks. I can't buy it without a dip. So I'm not going to chase it up here. And if you look at the financials, I'm not going to chase that either. Now, again, it might be the spot to be. And the structure of the weekly squeeze kind of suggests it might be. But got to pick your spots wisely. You got to pick the spots wisely. So, what I'm kind of looking for here this week, and it might not happen, but what I am going to keep an eye on is potentially do the financials begin to cool down a little bit? So can we get a bit of a dip here for XLF, Bank of America, Goldman, JP Morgan, and can we get a bit of a dip here for names in energy? So XLE, Chevron, ExxonMobil, EOG. This is where the money's going. This is where you have the bullish momentum. This is where you have some really good-looking weekly squeezes trying to fire along. I just can't buy it at 3 ATR. I got nothing to do up here other than sit, watch, and wait for a potential pullback. So what I am going to watch for this week is, does cash kind of... I'm not looking for a breakdown here, but can we get a nice dip? Little pullback in the energy financial names, and potentially does all that cash kind of rotate back into the Qs here? You get where I'm coming from? Where they rip the QQQ higher off of support, and then XLE, XLF, the Dow stuff, that's coming in a little bit. Now, if that is the case here, I think you kind of look to scale out of anything related to QQQ. So maybe you're long QQQ, maybe you're long some Apple, etc. I think any upside you get here, I don't think I'm going to look to buy tech. I think more so I'm going to try to scale out of positions related to QQQ. And if at the same time money's coming out of energy, money's coming out of financials, can I buy the dip there and try to get myself positioned to catch that weekly squeeze? So we'll have to see how it all plays out here. You have a key level, though. So I think the roadmap is pretty clear. It's just a matter of which way are we going here. So if we break, things could certainly get much uglier. If we hold and they kind of spank the shorts again, I think you look for pullbacks in other spots and try to scale out of some QQQ. Now, if your QQQ pulls, one of these and you're back above your 21, you shift the histogram, you got stacked DMAs, then maybe we kind of get that push into earnings, for Apple, Google, etc. But if you just get a rip here to the 21, I think you scale out, I think you look elsewhere. So we'll have to see here, my friends, but names like Google right now, there's just no edge to that chart. Total breakdown, daily squeeze, fire short. So if you're looking to play tech here, in my book, the only option right now is Apple. Without a shadow of a doubt, that's your best structure. If you lose Apple, you lose the whole ship. So it's a pretty easy conversation there. You're looking for tech exposure, you're going with the big Apple. In another group here that still is getting buy signals, still is coming up on the scan results, is the semiconductors. This could break down as well. So you have names like Qualcomm, which look super, super solid here. You could lose that, right? So the whole question right now is rotation. Do they rotate back into tech semis? Do they keep rotating out of tech semis and tossing that cash at energy, financials, industrials? So it's a good-looking structure for sure. It's almost picture perfect, but if they keep rotating out here, it's going to break down. I think you have it on the watch list, though. I think you have a name like NXPI, a name like LRCX. You have these on the watch list just in case they do rotate back into big tech and big semis. Otherwise, as you're doing your scans here, keep an eye on energy names. Keep an eye on industrials, financials, materials. One good setup right now is MP. That looks a lot better than Google, than Netflix, than Amazon, than Microsoft. You got weekly, daily stacked DMAs. You got weekly and daily green 10x bars, and a great looking squeeze. Right? So that's the structure you're looking for here. But what we're not looking for, just because we love to play Google and it's one of our favorites, keep it simple. You don't got any buy signals, so it probably shouldn't be the first thing you rush into buying. But that's what I got for you guys here this morning. I still got to kind of show what I'm working with right now. So last Monday, we bought back our QQQ put credit spread for about 80% of max profit. And we did jump into another one. So, if we don't get a big bounce here, we might have to jump ship, and then everything's kind of break even as far as looking for higher highs here on the QQQs. So it might end up being a break even endeavor. We also took profits last week in Ford. Beautiful trade there. We took profits on Apple on the push into 183-ish. And we took the entry a few weeks ago in the 4-hour squeeze. So we're getting long over here. 4-hour squeeze gave us the push. So we're taking some Apple profits, we're taking some Ford profits, we're taking some profits in the QQQ. So we're making a little bit of money here. And I got a long position in Dollar Tree still. And what I like about Dollar Tree is it's kind of in its own little world. Good structure, histogram shifts momentum. So I'm looking for more setups like this. But we're long Dollar Tree. I still got some AMD here. So I got a January 21st expiration, 135 short put credit spread on AMD. And if we close today under 130, I'm probably going to ditch the thing. And if we could bounce back to the 21 EMA, probably taking home like 50% of max profit. So this could be a small loss. It could be pretty decent paycheck. I have still got some, let me see here. From the tax loss class, I got the Zoom. And quite frankly, the whole tax loss thing, it's kind of been a bust this year. So I'm kind of glad I only did one. So I get a little bit of Zoom there. Still have some Amazon. So the key, the line in the sand here for Amazon is 3,200. So if you break 3,200, you could start to see that weekly squeeze really break down. And it's going to come back to whether or not the Qs can hold support. If the Qs can hold support, you could get a pretty big rip here on Amazon. Is typically you move down towards -1 ATR, and they rip it back towards +1. So down to -1, back to +1, down to -1, back to +1. So if the QQQ can hold support, and you get some cash heading back into tech names, Amazon could bounce pretty quick. 3,400 to 3,600. Otherwise, weekly squeeze could break down there, so we're being patient on that, but that is what we're working with for the time being. So the major focus today will be the QQQ, and the focus there clearly is whether or not we can hold key support. And I wouldn't short it here. That might work. That might work. What I would rather do is, if we break down, wait for that next oversold bounce, and then look to short it for the next leg to the downside. Typically, right, and it might be different this time, but typically, getting short at key support, down here at -2 ATR, typically it's a recipe to get short, and then kind of get your choppers kicked in as we bounce back to the falling 21. So I'd be a little bit patient here. But that's what I got for you guys here on Monday, January 10th. Again, I wanted to get this to you a little bit early. I got some slides to work on this morning for my upcoming class, which we can talk about more later this week. But until I see you on Wednesday, be good, trade safe, be disciplined, and I'll talk to you soon. Always appreciate all of you watching.